Hi everyone, welcome to this Q&A session you are having on this nice Thursday night. Thank you for taking time out. I know it's really very busy for a lot of you working from home still, and some of you are back in the office. So my name is Paul. This Q&A session, please feel free to ask questions. I'll be making some points along the way, but ask your questions if you have any. Now, for those questions that I'm able to share, I will share. Those I don't know, I promise you I'll find out and come back to you very shortly. Okay, and in the next few days, we'll respond to you. Now, I'm not sure whether we can answer all the questions today, but let me run through you some of the basic points that we intend to do. Okay, so let's look at this, right? A little bit about myself. My name is Paul. I'm actually Managing Director of Fintech within the PropertyGuru Group in Singapore. So I've been in banking a long time, more than 20 years, but in the last few years, I had done things like startups and all that. But what is important at this point in time is that, we've gone through, I've had the opportunity to go through a lot of clients, the challenges in the market during SARS, during the global financial crisis. And right now, we are right smack in the middle of COVID-19. You see countries like France and going back into lockdown. Australia just came out of one. So what's going to happen to us and what's going to happen to the property market? I think we're just having some discussions about that today. Okay, so that's the whole idea behind what we're doing today. Okay, so if you think of questions, just put it inside your chat. If you're in Zoom, if you're on Facebook Live, just comment. Yeah, I have my colleagues all looking at that currently. Okay, so let's continue. So today's agenda now it's about 7:35. So I'm just going to be talking some general points about home financing, what I see that's happening in the market, potentially what can you do. Now, because this is meant to be a Q&A. I've allocated very little time for myself, 25 minutes to cover some of these main points, okay? About 8 o'clock, we're going to ask questions or answer some questions that you have for us. Some of you already sent in some questions, so we'll be handling that, plus other questions that we have. Finally, at 8:25, we will wrap up. Hopefully, I realize that time is of the essence, so let's continue, okay? So generally, how is the Singapore property market doing? So I think the first thing that we can look at is to go back to the property price index. That shows you how the markets have been moving in the past and all that. So this is something that's happened in the last 25 years. Of course, it's gone before that, okay? So if we look at this, you see this little box here. And this was when SARS happened, right? Very little dip, okay? Let me just put laser pointer. Okay, so very little dip. It was relatively short period, right? So SARS didn't really affect the Singapore property market. What did affect the property market was this, which was the financial crisis, right? What happened was that property prices came down, but you can see that along the way, the trend went back up. Now, the next question is this, right? Where do you think we are at today? Has the number dropped a lot? You can key in your comments and things like that, or just think to yourself, okay, has it gone upwards, sideways, or downwards? Okay, I think that's the main question that is on everybody's mind. Okay, actually, if you look at this, right, you realize it's dipped a bit, but it's continued on its upward trend. So it's very strange, right? Why is that the case? I think that's a very, very important question. One of the things that if you look at it, the Singapore government has done a lot to buffer up the job situation in terms of liquidity. It's given out to everyone literally, and because of that, the confidence in the market. Of course, you read statistics about how over 100,000 people have lost their jobs, but at the same time, you read about increase in job supply. You read about internships being offered. So the government intent to support the market is very, very strong. Okay, so you see that. So that's why currently, right, it's not at the end yet. Obviously, we're still in the middle of it. So that's one thing to bear in mind. Okay, so if you look at this, right, the HDB resale prices have gone up 1.5% in quarter 3, right? And also you see the close to 7,800 units sold. Now that could be partly due to pent-up demand because during circuit breaker transactions dropped quite a lot, right? To about 3,400, right? So it also went up when circuit breaker was removed. People wanted to buy. Of course, families would need a roof over their head, right? Couples need to get married and things like that. Okay, so that is part of it, and the other part is the optimism that you have. And because of this, right, if you look at this, you realize that the private property market was also very robust, right? Home sales went up and all that. If you analyze the new home sales figures, you realize it's outside the core central region. A lot of it is actually supported by the robustness in HDB. When you upgrade, when you sell HDB, if there's demand, you can take that and transfer to your new property. So that, I believe, tends to be it. How is it going forward really depends on the economies, how it does, a lot of other individual factors. So just very quickly, what are the considerations when buying a property? I think, I'm trying to simplify things. So excuse me if I'm not going into full details, right? But if you look at this, firstly, it's the level of home approvals. How strict are the banks or financial institutions? The other one is interest rates, obviously. Every time people think about home loans, they think about interest rates. And lastly, what is the home loan repayment strategy that you should consider? Okay, so I'm going to suggest one only, okay? But again, if you have questions, please feel free to ask. So firstly, let's talk about credit bureau. In Singapore, you look at credit bureaus, right? And this is a sample that you actually can download off credit bureau. If you haven't downloaded before, please do. And it's only $6 plus GST, and you can do it instantly, almost. They will email to you. So if you look at this, they have details of for example, Peter, right? IC number and so on and so forth. They know when your credit history started and all that. Okay, a lot of information. The banks have a slightly different view. They have more information about you than what consumers get. So if you look at this, you realize that there's a consumer version, right? The next thing is this. When you look at this, you realize there is this rating AA, BB, CC, BB, so on and so forth. There's more than up to H. There's HX, HZ. The definitions are all given inside the report. So when you purchase a report or when you take a look at the sample, they will tell you exactly where you are seated. And all that could be a whole bunch of reasons. How many credit facilities you have, how you handle your credit. Do you pay back on time? Do you draw cash out of your credit line? All these things will impact your score. But how is your score exactly calculated? Nobody knows, all right? Except people from credit bureau. Okay, so when you look at this, you realize, okay, a good starting point is to look at your credit bureau. If you're AABB, right up to maybe EEF, depends on the bank, right? Some banks are more liberal with that, and also depending on individual circumstances, you look at these things, right? So this one is a risk grade. This risk grade represents a certain risk level. So for example, you see this percentage, 0.28%, right? It means if I borrow money from a bank, right, and I'm HZ rating, the risk of me defaulting is 0.28%. Right? Of course, it's very low if you're AA. Now, this is what we call averages. I mean, it takes a certain percentage. If 0.28% of your clients default as a banker, there could be some impact on your overall loan book. So that's why they look at these things. And then finally, all these details about your loan, they know exactly where you borrow your money from, what kind of debt, are you servicing it properly? All these things are inside the credit bureau report. Also, I've seen in many cases, or not many, in some cases, credit bureau reports sometimes reflect the wrong transactions. For example, if I don't have a card with a particular bank, but it reflects that card, sometimes it's because of the old card, didn't withdraw, and so on and so forth. So I think it's really important that one take a look. Now, that is one thing. Credit bureau affects your approval. The other one is criteria, loan criteria, the rules. So within this, a lot of people know about total debt servicing ratio, or TDSR. There is something known as mortgage servicing ratio, or MSR, for HDB flats. So these are the things that the government dictates, right? Regulation-wise, they will tell you TDSR, these are the things that you have to live by, right? Actually, it's not just that, because a lot of clients tend to think that whether or not a bank will approve is purely dependent on the TDSR or whatever ratio. Excuse me. The reality is each bank has its own credit policy. So Bank A, Bank B, Bank C, the chief risk officer or the risk departments will look at it and say, we have individual criteria for different kinds of loans. So a good example is this. If I am self-employed, for example, and I have 100,000, right? TDSR says I have to discount my income, or the rules dictate that I have to discount my income by 30%. In other words, the banks will only recognize 70,000. That's by law. But for one reason or another, the banks may say for certain types of customers, because of the risk, they will discount it more or less, or not less, but more, right? So maybe they discount by 40% instead of 30%. I'm not saying this is happening, but the banks have the leeway to do that. That's why sometimes when you apply, right, you'll get approvals from some banks and not approvals from, or declines from those other banks, right? It's not you, it's them, okay? So don't feel upset if that thing happens. That's why it's very important to understand what banks look at, and that's what we help at PropertyGuru Finance. Okay, so because of these uncertainties, right, every time you're looking to buy a property, we always tell clients, please go and get an in-principle approval, or approval in principle. This means you go and apply to a bank to get a formal approval, not just take a piece of paper, calculate, you should qualify. That's what we call a pre-qualification, right? But a pre-approval literally means the bank has to do most of the work. They have to do a search on you, a credit bureau report on you, all these things that they've gone through the process to approve you. Then the chances of you getting a loan will be higher. It's not 100% because the banks still have a right to withdraw the approvals, but that doesn't happen very often. Okay. So firstly, obtain a in-principle approval and then make an offer on the property. So it's good to begin your journey earlier and then go through the whole process. Okay. So the other thing is this, right? People look at interest rates all the time. And if you look at this is SIBOR. And what is SIBOR? SIBOR is basically Singapore interbank offered rates. Okay. Yeah, I'm just reading off that. But what it means is this, right? The Association of Banks, which administers these rates, go to banks, about 22 banks or something like that. Then it will say, 22 banks, can you please tell me what you think SIBOR will be? What you think, meaning your expectation of how much you can borrow money for. Okay? So the individual banks will make a forecast. Okay? Then what they do is this. They will drop off the top 25% and drop off the bottom 25%. The middle 50%, they average it. Okay, so they don't consider if you are a major contributor, meaning you lend a lot of money in the market. All right, and a lot of your transactions actually account for the market, but it's not counted. So they just drop you off and then average the middle. The other thing, if you look at SIBOR, right, is this. If you look at the words, the rates at which it could borrow, were it to do so by asking for and accepting it. So it's a question of expectation. So let me give you an example, right? If let's say over the next month, globally, they show you that the economies are growing, the recovery is fantastic, going out of the problems, right? Economic problems. What will happen is that likely you will see SIBOR going up because people will the banks will start thinking, well, because it's this recovery, I think, of course, there are other factors, I'm simplifying it, but you'll look at it and say, I think I should be able to borrow but it will cost me more. So therefore, you see, SIBOR tend to go up faster. Okay, that tends to be it. Okay. If you have any questions, please ask. I mean, I'm in the interest of time. The other thing is that, you know, currently banks, a lot of packages are based on SIBOR or 3-month SIBOR rates. That means what they expect to borrow on a 3-month basis. Okay, this is a very, very popular thing that people look at. So I told you about the process, right? They look at the interest rates, they drop off the 25 and the 75, right? And then they will average the two, right? So what is happening recently, right, is that the market or the MAS, the Monetary Authority of Singapore, has done a study together with ABS, right, Association of Banks, and they say, okay, I think there could be a new rate. And this one is a bit different, okay? This one looks at the borrowing, actual loans are made, transactions are based on overnight. And the market timing is 8 a.m. to 6 p.m. So it's actual transactions, all negotiated, whatever. It is not an expectation. What they do is they take the weight of the volume. So it's really based on transactions, based on if large volume is based on certain level, the rate will be average on that basis. Okay, so it's weighted. So if you look at this, right, it's instead of looking forward, right, it's backward, it's real one, okay, not expectation. The other thing, they consider a bigger players, I told you. So if bank A lends a lot, they will naturally influence the rates more. Okay. And then lastly, it's likely to be more stable. Okay. Why? Because expectation is expectation, right? But reality really will influence the rate. Okay. Now, a lot of this thing about SORA is very, very new. Okay. So there's not been much loans being based on that, but I see that there will be a shift. Okay, so you are likely to see a shift in that area. So if you are a consumer, right, if there's a SORA option or multitude of SORA options available, time will show, it will come out. It is better for me because I can then better predict. And if it's a 3-month SIBOR, you'll probably relate to a 3-month compounded, meaning they take average of 90 days or 3 months, right? So that's very good for consumers. That's what it means. Okay. The other reason is this: SIBOR progressively will become less and less quoted. All right. So it will start in 2021, then the different tiers will drop off. The last tiers will drop off in 2024. The banks are actually considered what we call enhanced SIBOR, and they tested it, but it didn't work because the risk was very, very high. Volatility was high. That's not good for the economy and not good for financial institutions, not good for clients. So that's why they've parked that aside and they've looked at compounded SORA to replace that over time. Okay, so my theory, I mean, it's only one bank currently that is doing that. But I think a lot of banks will start going on that, especially since Association of Banks has also recommended that. Okay, so that's what it means. If you watch out for it, you realize SIBOR packages will get withdrawn. Okay, the rates are very, very sexy. Okay, let me go back a bit. So if you look at SIBOR, right, you realize the rates are now about 0.25, right, or 0.4 something for the 3 months, right? Very, very attractive. It's going to stay low for the next few years. Why? Because it's correlated strongly to Federal Reserve, and the Federal Reserve rate will be kept low until end of 2022 to 2023, right? Because, and that's why I talk to you about forward pricing, right? Because such a big authority as I say, we're going to hold rates very, very low at 0 to 0.25%. Therefore, the expectation is that rates will remain low. You see how it influences? And therefore, I think rates will be low. So don't worry, okay? Those of you on SIBOR, don't worry so much. I'm on SIBOR, so I'm quite happy the shift in rates, okay? But certainly SORA is something I would look at. Now, I've been talking about interest rates, and interest rates is one thing that influences your monthly installments. Now, I'm mindful I have about 7 minutes left, not much time. But so what are the things that we are looking at? So how do you repay your home loan? in a way that protects you. Okay, so you know about TDSR, right? Total debt servicing ratio. Under total debt servicing ratio, when you actually get the loan approved, when you go to the bank, your monthly installments are calculated based on your actual interest rate. So in this case, you see 1.3% is your home loan rate, right? And based on the calculator, actually your monthly installment is about 3,356. You can see that. Don't worry about this too. I'll explain what it means. But 3,356 is your monthly installment. Actually, when you are calculating the TDSR, or total debt servicing ratio, the banks by law are required to use an interest rate of 3.5%. So when you calculate, this one you can ask your banker to calculate for you, or you can come to us, we can help you calculate what the 3.5% looks like. So if you look at this, or you can come to our website and calculate, we have an affordability calculator there as well. So at 1 million loan for 30 years at 3.5%, your installment is 4,490. Now, a good strategy is to pretend your housing loan is costing you 4,490. Okay, transfer this amount to the bank that you're paying the loan to. Your actual monthly installment is 3,356, right? The difference is 1,134, right? That's what that means. And over 1 year, right? Assuming rates are all steady, it's 13613. Okay. Of course, rates may change if it's a floating rate. I'm just giving this as an example. So if you look at this 13613, and what does this mean, right? Actually, if you take this and you divide by your 3,356, right? Automatically, by doing this strategy, you are building a 4-month buffer every year. Now, not everyone can do this. So don't do 4,490 if you can't. If you can do 4,000, you can do 3,008. You're building a buffer. A lot of people don't think about this. They save money by, I put 10% at the month, beginning of the month, 10% at the end of the month, then struggle like crazy, right? Do this strategy, it will save you a lot of money and you build buffer. The other benefit that you have is this. If interest rates ultimately move, right, you have buffer to protect yourself, right? So for example, if you save 4,490, let's say the interest rate moves 1.3 to 1.5%, right? You don't have to worry because automatically it's still going to be lower than 4,490. Plus, you still have savings. You will get used to setting aside 4,490. Also good for those people who are planning to buy homes. If you haven't bought a home, start setting aside monthly. When you buy the home, you don't feel pain. Okay, so these are simple strategies that I tend to share with clients, but that's a good strategy. Good coming from me, but my clients have said that it's been very helpful. So we're almost at 8 o'clock. So I'm going to talk to you about some questions, and we've had some of these questions that come, right? So let me answer some of these questions. So what is the best loan now? A lot of clients like to ask us that. And by best loan, they always talk about cheapest. What is the cheapest? But cheapest may not mean the best. Why? Because what we look at when we look at loans is how we structure, right? We look at how to manage your interest costs, how do you manage your cash flow. All this is part of a bigger conversation. I have shared this story before of how a client came to me and said, I want the cheapest rate. I want the smallest loan and all that. But what happened was that, I asked her and we had this conversation. I said, what are you doing this for? She said, I don't like interest. So we had this conversation where I said, if I could show you a strategy for managing the interest, would you consider it, right? Even if it means higher interest, right? But your interest is substantially managed. She thought about it, she said, okay, so show me. So I showed her. In the end, she took it. 6 months later, when I talked to her, she came to the bank to look for me. And I was a bit concerned because usually they complain, right, the clients. But I spoke with her, she said, thank you for giving me that advice. Had I gone with my strategy, I'll be in trouble. I said, what do you mean? She said, I got retrenched. Her original plan was to use all CPF and all her cash and maximize the monthly installment. No savings, no buffer. She said, had I done that, I would have to sell the property because no way. She was supporting her parents. She was a single lady. Okay. So best doesn't mean, cheapest doesn't mean best. Okay. Should I use my CPF funds? Yes and no. It depends on your objective. Some people say, okay, instead of 800,000 loan, I want to take 500. You only use CPF, right? You can do that. But just now I showed you interest rates are 1.3, 1.4%, right? So your CPF pays you 2.5% minimum. So the difference of 1.2% by leaving your money in CPF, you make the difference. Every month you take the amount to pay off a 1.3, 1.4% loan. It doesn't make sense to take out your money from CPF. The other problem is this. When you take money out from CPF to use, you end up having what we call accrued interest, meaning it's the money you owe yourself. I take the money out to use for housing loan. Otherwise, if I left the money, it would earn 2.5%, right? So I have to make back the money to put inside for me, right? It's a retirement strategy. HDB loans are the safest. Should I just borrow? Yes and no. Again, if you're looking for savings in cash, you say, I don't want to use so much cash, then by all means, take from the CPF, because take from HDB, because you can borrow up to 90%. Of course, there are some rules that are there, okay? But you can borrow up to 90%. If you buy a property, a BTO or build-to-order flat directly from HDB, you actually don't have to pay any cash if your CPF is sufficient. But remember, CPF charges you 2.6%, or HDB charges you 2.6%. And the interest rates from the banks are substantially lower. So a lot of them, I tell them, even if the market was so good, right, we never saw the rates go up to 2.6. At the most, it was something like 2.2, 2.1, 2.2, right? So I want to borrow the lowest because I want to save interest. I give you that story about that lady. Yeah, I'm interested in lowest interest rate for the first 3 years. It's no good. If no good after that, I can refinance. Look at the COVID-19 situation. If 3 years ago, somebody had bought the property and said, I want to refinance, right? After 3 years, and they lost their job, they can't refinance now. Okay, of course, there are COVID-19 release that say you can stop paying your housing loan until 31st December, and recently shifted to June, right? Extension. But that's the thing. See, people assume, and it's a human condition, we assume that we will be in the same condition or better in 3 years' time. That's the risk. So, the best strategy is to plan as though you don't have the option in 3 years' time. When 3 years' time comes, if you have the option to refinance or reprice, whatever that you want to do it. But if you are not in that position, at least you're in a good position to start off with. Okay? Sorry if I'm rushing very fast, but please submit your questions. I see questions coming quite a lot, quite fiercely. Just give me a minute now. Okay, let me see. Okay, there are a lot of questions in. We've had some questions before, actually. Again, like I said, if I don't have time to answer all the questions, I promise you we'll answer it within the next couple of days. Okay, so let's look at this. Peter, is there a maximum duration for holding on to a property for investment? I'm assuming you're talking about the property purchase. The answer is no. Okay, of course, if you're buying a 30-year industrial property, then after 30 years, something will happen. I don't know about the lease question. I mean, that's still being answered today. Okay, that is the first thing. But if it's a freehold, then you can hold indefinitely until the life of the structure, there's a problem and things like that. Okay. Again, from Peter, some investors own several properties. In terms of financing, how do they do it without feeling stressed? In terms of payment, is there truly a way? Can Paul enlighten us? Okay, so thank you for your confidence in me. Okay, there are a lot of strategies in the market. Firstly, the pure one is that some property investors surely can afford it. I've seen a lot of customers whose incomes are very strong. They're business people or employed. When you have a strong income and savings, you can do all these things, right? I don't know about the stress part. I know a lot of people, a lot of our clients, when we talk to them, do feel some level of stress. Why? Especially if rentals are not so strong. I have a question. I have something to answer about rental later, but especially if rentals become challenging, right? And you need the rental figure to service your loan. Okay. is that truly a way? Answer is yes and no. I mean, if you go to the market, there are a lot of gurus that give you the options to combine and buy properties. But there are pros and cons to these strategies. I'm not an expert in those strategies. I understand how they work. But whether I agree or not, it's just my opinion. But there are ways down there where people are working around. Okay. But is there a risk? Certainly, right? We have to understand what we are getting ourselves into. All these are commercial decisions. Okay. Sorry if I get a bit distracted at times because the questions are popping up. So sometimes I get a bit distracted. Okay. Okay. Owning second property from Wendy. I don't have cash. I want to have passive income in 5 years' time. I am paying my housing installment by CPF. I don't know how long I can run my company. So the first thing when I look at this is this. I am not sure how long I can run my company. That to me is a red flag. If you're in that situation and you're thinking, I want to have passive income, my clear thought is that I would not put my money into a property. It's a commitment, right? That's the first thing. Second thing I look at is this. When you are looking at economic uncertainty, it means your income will be impacted and you're self-employed. So I told you there'll be 30% impact discount, right? So the question is, will the impact be impacted? I mean, will the income be impacted? Am I able to service? I don't want to be in a situation where I invest in a property, my income drops and I'm forced to sell it. The worst thing is this, right? If I'm buying a residential property, right, a private property, and within 3 years I sell it, I'm hit by seller's stamp duty, even if it's a loss, right? So those are the things that we have to think. If I look at this, it sounds like there is no clear sight on stability. So Wendy, you can come and contact us and talk to us, okay? We will help you review your matter. I mean, if it is challenging, we'll tell you it's challenging. The other thing is this about cash. Investing in a property, you have to be able to put money down, right? If this is a second property you're going to buy, and I'm assuming it's a private property, then the loan quantum is very, very low, right? All signs looks 45%, right? 45%. Yeah, then you have to come with cash, CPF. A lot of this, the laws are designed such that you have to come out with a lot and your financing is low. So not the best time to be looking at that, Wendy, until you settle your situation, where your business is settled and all things. I hear you about your current house and your situation. A different strategy would be perhaps to sell your property and move to a smaller unit, right? Take the difference and do something with it, right? I don't know, because I don't know your circumstances. Okay, but generally these are the thoughts I would look at, and we can have a conversation around that. Okay, so how's the rental market outlook given the COVID-19 uncertainties, right? Government effort to hire more locals. Rental market outlook, interestingly, we had this, what we call a consumer survey, a consumer sentiment survey. And we did this question, we asked about 1,000 over people what they expect about the rental prices. A lot of them expect that the market would increase over the next 12 months, the 24 months, or after 24 months. So generally, at least stable or higher. Okay, so that was very interesting that within our this study, right? And this is a study we do twice a year. Okay, if you want to get links to the survey, just click in and we'll send you the links later. Okay, but yeah, we think that a lot of investors and landlords expect rentals to go up. Of course, in the short term, I've heard about quite a few landlords saying that, okay, I know that it's challenging for you. I give you a slight discount, on your rentals, even though they don't need to do it. Everyone is made together. Generally, they will try and help. Okay, so Okay, so this is the part where I'll look at the questions that's in today. Okay, you can scan this up. You can have a WhatsApp chat with us. You know, this is our phone number. You can email us. Okay, I'm going to leave it at this page, but let me look at the questions. How do you overcome ABSD if you have more than one property? To buy additional unit for investment purposes. So I think the first thing is what kind of property are you planning to buy? If you're looking to buy a commercial unit, ABSD doesn't apply. Okay. Now, if you have one property, a lot of strategies, a lot of clients come to us and say, "Oh, let's do a decoupling." I'm not talking about the Chris Martin, Gwyneth Paltrow decoupling where they separate. I'm talking about in terms of the property, meaning one of the parties sell the property to the other party. Okay, and then it frees up the first party to go and buy a property in his name or her name, right? When they do that, they are not subject to ABSD. Okay, so essentially, it frees up to do that, but there are a lot of implications that we need to explain, and you need to understand what it means and things like that. And also, it's a matter of structuring, because I've seen situations where they decouple, not handled personally by us, but where they decouple, they end up having to come out a lot of cash and they plan wrongly, meaning they decouple to the wrong person, right? Husband to wife is better than wife to husband. Then a lot of things we have to consider. Is this a good time to invest in a property? The purpose is to build a safety net and passive income since I'm already 56. Wendy. I think could be Wendy, same Wendy. Assuming it is not in those points that the earlier Wendy was talking about, it is always a good time to buy a property. But the question is this, right? Is what property you're planning to buy? One needs to look at it and say, does it make sense financially? There's a price for everything, right? The thing is to be able to understand that sometimes you need to walk away. It doesn't make financial sense. For example, the place I live in, right, was bought during a point in time where the market was supposed to be very hot, right? But you know, we were very blessed to come across this property. We negotiated well, we did our homework, and I felt that we got our property at a reasonable price, right? So really, there's a lot of opportunity, and people also ask me associated with this question. Oh, I want to go and buy all those auction properties. Now, look, if it goes to auction, a lot of people have known about it, right? If it's a really good deal, a lot of people have snapped it up. Occasionally, you get a very good deal, but really, in the market, right, you will see a lot of properties. You have to do homework. Come to a PropertyGuru website, go search and look around the listings, and go and view, right? You will find good stuff there. Okay, just do a bit of homework. The work that a lot of people are not willing to do. At the same time, there are people who are willing to do it. So, you know, there's opportunity to buy. Okay. Hi, Dinesh. So, okay, refinancing is difficult. I don't know your circumstances, Dinesh. What you can do is contact us and then we can look at your specifics. There could be a lot of reasons why banks are not offering refinancing. Perhaps if your loan size is below, say, 100,000, or it may not be financially viable to do it. Some banks have, in fact, most banks have limits to how small the loan size, right? It could be also a factor of the type of property. For example, if it is a property that's right smack in Geylang, right? Some Geylang properties are difficult to finance. And depending on or structurally, you know, those kind of things, I have no details. So it's a bit hard for me to explain or answer clearly. I apologize, okay? But come to us and then we can look at that, okay? I think the big part is your collateral and the income criteria. Of course, there are ways to understand it and you know, we'll work the numbers for you. Hi, Jane. With the current climate, should I go for repricing of my current mortgage loan or make use of RS, which is open for application in 6th November? Okay. So I think the first thing to do is this, is to ask your bank what they can offer you, right? Do that, because if you don't do that, you are already considering. Some clients have done that. They come to us and say, not very exciting, what should I do, right? Then we bring them to better options. But certainly look at both options and consider. Again, it sounds like you may have some situation that we are not aware of that would make sense. Again, we have to look at it and say, is it a matter of pure refinancing or repricing, right? Yeah. Go and check with your bank first, and with what they come back, they'll normally come back to you within a few days. When they come back to you, come reach out to us, and then we'll see whether it makes sense for you. Okay. Again, sorry if I sound as though I'm skirting the issue. I'm not. Okay. If I have full information, and I understand this kind of platforms a bit hard to talk about private things, are a bit hard. Interest rate fixed for 5 years, considered high in current condition. So my question to you is this, Christopher. Are you worried about the fixed rate, or that rates are going to move in the next 5 years? Or are you interested in the interest rate, right? So certainly 1.5%, you can get lower, right? You can. But those are variable rates, right? So what's important to you? What makes sense for you? What is the strategy? Are you planning to sell within the next 3 years? Right? Straight away, if you're telling me, oh, I'm planning to sell within the next 2 to 3 years, then the 1.5 fixed doesn't make sense anymore. What's your plan to hold the property for? Okay, these are the questions that I would normally look at and say, if you want fixed, certainly the 1.5% is okay. Yeah, it's attractive. Worthwhile looking at. Okay, again, Christopher, I'm happy to have my colleagues help you with that. It sounds like you've already done your homework though. You've been talking to people. Can advise on pledging cash to increase loan quantum. Okay. Sam. Yes. Okay, so there is a criteria that does this. If you show your income and the income says you don't pass TDSR, right? Or the TDSR is low, right? Then what can you do? Say you have a lump sum of money, right? And there are 2 ways you can handle the cash. Okay. First way is you can tell the bank, I'm going to place this as a deposit in your bank for 4 years. Okay. What the banks will do is they'll convert this figure, divide by 48 into a monthly figure. All of a sudden that figure becomes your income. Okay. They use that as a cover or proxy for income. Okay. Now, if you say, I've got this cash, but I can do a lot of things with it, and then you go to the bank, you say, okay, I can show you this cash, but I don't want to place it as a lockdown or what we call collateral with the bank. Then the bank will say, can, show me, but I will discount it by 70%. I think it's 70%. I haven't looked at it in a while, but yeah, 70%, I think I'm right. They will only consider 30%. So if you have $1 million, it becomes 300,000 and divide by 48. That's your income. Then TDSR is 60% of that. Okay. That's how it works. Whether you want to lock it there or not. How does equity loan? I hope I answered your question, Sam. Pauline, how does equity loan work? Okay. So equity loan works as I take value out of my property. So for example, I buy a property for 1 million, okay? And let's say in the past take it for 800,000 loan, assuming I service it with cash, because servicing with CPF introduces some complexity, okay? Let's assume cash. So I pay down, then now the loan is 100,000, right? So what is the equity? Equity means you take the market value minus the loan, right? It's 1 million, let's say didn't change, okay? unlikely, but 1 million minus 100,000 is 900,000. That's the equity. Equity loan means I'm able to take a loan against this 900,000. And how they normally measure is, normally banks will say 75% of your loan, then minus, so 75% of 1 million is 750, minus your, did I say 100,000? Minus 100,000. So you can take up to 650,000, but it depends on, again, on TDSR. I don't remember this part. It depends on your quantum of financing. We look at that. And your CPF figure will also complicate it, because if you have used CPF to service it, they have to strip that out. I apologize at the one about I can't remember about the TDSR portion, but certainly you look at, they have to look at TDSR, your income and all those things. Okay, income. Bing Chu. You don't understand. Okay, sorry. Okay. Repeat the strategy. Okay, let me see. Okay, down here. The 3.5% is not what you actually pay. It's not what you actually pay. You don't pay to the bank 3.5%. The bank doesn't take 3.5% from you. It doesn't. You are still paying them 1.3%, right? You are pretending that your home loan is 3.5%. So every month, right, you transfer 4,490 from your bank to your assuming it's different banks, you transfer inside the bank that has your loan. The bank will withdraw 3,356 from your bank account, right? And your 1,134 will sit inside your account. It's invisible savings. That's the strategy. I tell you, then people tell me, oh, I leave my money inside there. There's no use, interest rates are low. Yeah, but then it's an option, right? After a year, you can take that. You can use that to do partial prepayment, assuming you're out of lock-in, or you can use it to invest in something that yields you better than 1.3% or whatever interest rate, right? This is a strategy that a lot of my clients have used, and a lot of clients were not aware of in the past. So when they do this, they'll say, hey, all of a sudden every year I got 4 months, right? This is a very simple example, but you understand the idea, right? Oversave, if you can save 10,000 every month, by all means save 10,000. Just transfer 10,000, part of it will go towards your loan, the other part is inside your saving. Okay. I hope I'm clearer now. I hope I'm clearer now. Okay. We have 5 more minutes. If I sell my HB at a loss, do I have to return the difference to CPF? Answer is no. Okay. I'm not a property agent, Shiran, but I believe when I looked at this, again, my specialty is financing. While I run the business and my team helps me with talking to clients. I talk to clients as well. And sometimes I don't remember facts because I don't touch it every day. But if let's say your HB, right, you end up that there's a loss, right? You owe yourself money, okay? The only thing you have to take note is that, remember the 5,000 cash when you sell HB is 1,000 plus 4,000, right? Upon exercise and all those things. Usually at the loss situation, the 5,000 you also need to refund. You cannot touch that cash, okay? That's the only thing you need to know, okay? Again, if you're not clear, check with your real estate salesperson. Usually they're very clear about that, okay? Again, like I say, I help people with it. Kenneth, particular company that always advertise on YouTube that people can always buy commercial properties with little or no money. What is your opinion on it? So firstly, I am not an expert in that area. I personally don't do it because how should I put it? I just don't understand it enough and have the confidence enough to have this strategy. Because if I have little or no money, Yeah, it sounds something that there's some form of risk I probably have to bear. Again, I'm not an expert. Okay. So I need to pass on that question. Okay. What's your view on longer lock-in period of 5 years fixed rate instead of 2 years? Lock-in at 1.28. Ah, Bing Chu. Hi. We spoke earlier. 5 years loan allows partial loan repayment, can also no commitment fee in the event we sell. Given so, is the 5 years, look, 1.5% is a good deal. My friends laugh at me, when they asked me last time, what's the interest rate in Singapore? That time was 2.1, 2.2. My friends live overseas, they laugh. They say, my interest rate 5%. Yeah. Okay. My colleague Ben has confirmed that the loss don't have to return to CPF if it's sold at a loss. Okay. So don't worry. Okay. So if you ask me 1.5% versus 1.28, right? It sounds like you were really planning to sell everything true. Personally, the 1.5%, I feel is a good rate. If they allow you what we call a waiver due to sale of the property, I think it's a good deal. It's 0.22 difference already. It limits your upside risk, But you see, some people are like that. Some people, like me, when I take a view on the market, I'm not worried about the risk because I take a view, I could be wrong, right? Some people are willing to pay more for a fixed rate, even though everyone tells them the rates will be low. I think that's important to note. Huh? Different strokes for different folks. Is it right or wrong? I don't know. I have a close friend who insists on fixed rates no matter what. Okay, and that is usually a higher rate. Okay, so depends on what you're planning to do, Bing Chu. If you're telling me, okay, I'm planning to stay there, and I'm very risk averse, then by all means take the fixed rate, all right? Because the 0.22 risk, which is the difference between 1.5 and 1.28, may cause you sleepless nights if you are so inclined. Okay. How much cost is involved in decoupling, Vincent? Legal fees. When of course the cash commitment, if you're selling at 75%, right? You're selling at market value, then your spouse will come out at 25%. So mainly it's legal fee, stamp duty. Stamp duty, assuming that it is more than a million, is 4% minus 5,000, 15,004. Okay, so that's the formula. So essentially that's it. I mean, there are some incidentals, valuation fees, because it's a new purchase and stuff like that. Not very much. We can help you work out an estimate. Just reach out to us. Okay. I think we have quite a few more questions, but I will do one more, okay, for seating. Okay, that's a good question. Seating, you asked, how do you know the existing rate is still competitive? How often should you check competitiveness of your bank loan? How do you compare different packages, fixed rates, board rates, SIBOR, SOR? SOR not in use anymore, I think. Okay. Generally, I would do this. Review at least once a year. It's like health checkup, good or bad, just review. But no, don't just review for interest rates, review for changes in objective. Let me give you an example. Clients told me, right, last time they want to buy a property, and then 3 years later, when they have kids, the wife don't want to work. But the strategy is that they use husband and wife's income together to buy the biggest property they can. So basically, in 3 years' time, it means if you want to refinance, you can't, because the wife is not going to be working, income not enough, right? So that could be a big factor. Interest rate movements, you need to pack with a pricing strategy, how you manage your repayments, how you structure your loan. Do you lengthen the loan, minimize your cash flow? All these are many questions. But generally once a year, you can come to our website and take a look at what packages we have, okay? Under propertyguru.com.sg. Go look for under the mortgage section and you'll be guided there. And contact one of us. I mean, we can help you with that and have a conversation, like I said. Okay. So I have a lot of questions I can't answer. So okay, let me ask my colleague. Steph, do I have time to answer more questions? Yes or no, maybe? Okay. Okay, so I have a couple more minutes, okay, but so I'll try, okay, I'll try. Okay. Wendy, do you recommend to change the loan amount to cash out? I've been approached by some financial advisors to cash out my current property so that I can cash outlay to buy an investment unit. Okay, I can do 2 or 3 more questions. I've been given permission. Okay. Of course, then the loan installment per month will increase accordingly. Cash out is not the problem. Just now, Wendy, you mentioned that the situation with your finances and things like that is the challenge that you need to consider. Don't go and do cash outs without resolving the other part. Meaning, if I do a cash out, and I remember if it's the same question, you mentioned you have a company and you have a residential, right? It means that you're servicing actually on your home loan, you have a 30% haircut or discount on your income. Your challenge is in the getting the approvals required to buy the property, to service the installment, the approval for home loan. I think it's something worthwhile looking into. Certainly, maybe yes, maybe no. I mean, hard to say because everything is in the details, right? I mean, if I say yes, then you can do it, then you realize maybe you can cash out 200,000-300,000. And again, 200,000-300,000, if you cash out, will be against, you'll hit your total debt servicing ratio. All these things are a virtual cycle, virtual cycle. You have to look at it and you have to consider it. Okay. I don't have the full details now. So is this a good strategy? If monthly installment is not an issue, look, it is not a problem if your income, your TDSR is all these things it's just question of numbers. Then you have to look at the science of it, the mathematics. You think what's your expectation of the market and what type of the property location, age of the property, right? What kind of tenants can you get, right? All these things are part of a bigger question. Okay. Frankie, what's your broad view of this strategy touted by real estate? Sell 1 buy 2. This strategy, okay. So I think before we even answer that question is, what is your financial status? You have to look at it and say, okay, if I sell and I buy a property on my own, right? How will it impact me? What happens if my income gets cut? What happens if I do this? I think this buy 1, sell 1 buy 2 is not something that my wife and I would do. I mean, it's a strategy that works. Okay, a lot of them have done it to good effect. But again, like whether fixed rates or floating rates, you have to look at it and say, what makes sense for you? Are you afraid or are you risk averse? Generally, I'm quite risk averse to all these things. So it's my personal preference, not that it's bad. So please don't misunderstand. Again, I've seen clients do this, right? Sell the HDB, buy the 2 properties to good effect because their incomes are strong enough. All these factors you have to consider, right? And then it's easy to say it's successful when the market is going up. The question is, are you able to hold the property? And we talk about financial responsibility, about the ability to hold through challenging times. So all these things we have to model it in and understand it, right? Because if people tell you it's good, but you have no strength to hold, if the challenging, if let's say you lose tenant, right? Then what happens? Are you able to service the loan? So all these things are part of the discussion, right? I hope basically that is clear. Actually, all of a sudden I realized I've answered, or because some people ask a lot of questions, so I took one. So thank you so much for your time. I hope you've gained a lot of benefit. Can I ask you something? Those of you on Facebook or Zoom, right? Can you put in what you think I should cover? There's another session. I have another 2 more sessions coming up. All of a sudden, I cannot remember when. Check our Facebook page, okay? We'll tell you when. But what kind of topics do you want me to talk about in terms of financing? Any specific areas that you want to cover and all that? You know, ask that question or tell us what you want to hear, right? And I can share with you. You want to find out more about Sora and things like that, right? Sora's views are my own. I mean, you know, basically I haven't heard anyone really in the market look at the expectations, but this is what I think will happen. But please put in your questions, you know, what you think you want to hear, what will be interesting and things like that. If I can do it, you know, we'll look at it. If I can do it, I'll cover it in the next session. Okay. So thank you very much. I'm going to stop sharing. Yeah. So thanks so much for your time, and I really appreciate that time that you spend with us. Again, ask questions. You know, reach out to us. If you look at if you had captured our email address and things like that, reach out to us on messaging on PropertyGuru on Facebook. We'll reach out to you and have this conversation. I realize some of the details are very scant because we are dealing with confidential stuff for individuals. So talk to us. Okay. Thank you very much, and have a great day. And God bless. Take care.